Hey, how's it going, guys? We're heading into the second half of 2020 now. What a year we had so far in the financial market. Have you wondered how those heavyweight institutional fund managers think about where the market will potentially go next in the second half of 2020? Actually, one of the top research firms on Wall Street just did a very comprehensive survey of more than 300 fund managers and their outlook on the financial market in the second half of 2020. In this video, I will share with you guys the surprising results and as well as the extremely valuable insights from this survey that can help you to navigate the market like the smart money for the rest of 2020. So please make sure you watch the video to the end and don't miss out anything. I promise you I will make it quick and don't waste your time. Alright, let's get started. Here's some background information about this fund manager survey by DataTrack Research. The total participants are 341 fund managers across all different types of funds and strategies. All the questions are the choose one and the only one response, which means participants are not allowed to choose multiple options. And this survey started on June 22nd and closed on June 30th. The whole survey was actually pretty long, but I picked the best highlights that I believe are most relevant to the retail investors like you and me. Alright, question number 1. Where do you think the S&P 500 will end this year? 20% of the fund managers believe S&P will be up over 10% from the current levels. 22% believes we will go up around 5 to 10% from here. 21% believe S&P will be basically flat, with 5% up or down from the current levels. 18% believe we will be down around 5 to 10%, and the rest of the 19% believe we will go down more than 10% by the year end. I have been in the financial industry for more than a decade since my first job at Credit Suisse, but I've never seen such an even-out survey result on the US equity market. Usually for the risky assets like stocks, the result should be pretty polarizing. But this time, every single possible outcome has almost the same amount of supporters. And these surprising results give us two very important clues. First, even for those billion-dollar fund managers with the best access to the information, the amount of uncertainties in the market are so overwhelming that the smart money cannot even show us a clear direction where the market will go with full conviction. So the second half of 2020 will be an extremely challenging environment for both investors and traders. Second, the results suggest that for the next 6 months, the equity component in our portfolio should be strictly underweight. It's not a sell signal. You can still own stocks, but your entire portfolio should not be overweight on stocks. Because when the institutional smart money doesn't even have a clear direction, it's a really good sign telling us that the potential risk in the market is way much bigger than the potential rewards. Question number 2. Which asset class do you think will perform the best over the second half of 2020? 45% of the fund managers believe gold will be the best asset class to invest. 29% of them believe the top 6 leaders of S&P 500 will outperform every other asset class. 11% of them believe the US small cap stocks will outperform. 7% believe in the emerging market, 4% believe in the European stocks, and the rest of the 4% believe the 10-year US treasuries. So here are some of my thoughts. First, I'm definitely a strong believer of gold will perform extremely well moving forward. And even more importantly, the risk of overweighting on gold is very low because the macroeconomic environment we're having right now is extremely beneficial for gold appreciation. Gold has been the biggest position in my PA since March, and I'm happy to see those fund managers actually believe the same. Second, if those fund managers truly believe our economy will recover in the second half of 2020, then we should see they bet on the small caps more than the large caps because it can generate a much more return. But this survey result shows the opposite. That means, despite all this massive fiscal support from the Federal Reserve, the smart money are not fully convinced that our economy will recover in the second half of this year. Third, the bond market, which I always talk about, has already fully priced in a deep recession for the entire 2020. It was definitely one of the best places to invest for the past 6 months. But now, it is a little bit too late for the party. There won't be a lot of upside for the bond market to grow. But there could be still some opportunities, which I will talk about in the later part of this video. Once again, this shows us exactly how powerful the bond market is as the leading indicator to the stock market and as well as our economy. It always moves 3 to 6 months ahead of other asset classes. When the CNBC tells you we're in trouble, it's already too late. Alright, next, question number 3. Which sector do you think will outperform the rest over the second half of 2020? This one is not surprising at all. More than half of the fund managers believe technology will outperform the rest. That also explains why 29% of them believe the top 6 S&P leaders will do extremely well because they are large-cap technology companies. The only surprising part is the healthcare. Only 12% support this sector. I thought it would be much higher than this, especially with the COVID-19 crisis still goes on. Anyways, my thoughts on this result are pretty straightforward. Yes, I do agree with the majority of the fund managers that the technology will be the best sector for the second half of 2020. There is still some room for the tech stocks to go up. However, for the long term, the technology companies at the current price, especially with the current economic environment, are extremely overvalued. And also, this sector is overcrowded by the retail investors too. History tells us that whenever there's too much money chasing too few companies, it always ends pretty bad. So if you're a long-term value player in the stock market, you may want to stay away from the tech sector for now. Alright, question number 4. Do you think the Federal Reserve will implement a negative interest rate policy in the next 18 months? 77% of the fund managers believe it's impossible. The current Trump administration keeps adding pressures on the Federal Reserve to lower down the interest rate to the negative territory. But I do agree with the majority of the fund managers here that there's no way the Federal Reserve will cut the interest rate to negative in the next 18 months. Japan did that, Europe did that, but I do not believe the US will do that anytime soon. Next, question number 5. Where do you think the US 10-year Treasury yield will be at by the end of 2020? 36% of the fund managers believe the 10-year yield will be around 0 to 0.5%, and 48% of them believe the yield will be around 0.5 to 1%. So that is 84% of the fund managers believe the 10-year yield will be less than 1% by 2020. With such a dominant, one-sided view from those smart money, it can give us one pretty clear action plan, which is if the 10-year Treasury yield goes up to, for example, 0.9 to 1%, it will be smart to add some bond positions into your portfolio. Right now, the 10-year yield is trading around 0.6%, which is not a good place to add bond positions. As I mentioned earlier, this level is a little bit too late for the bond party. However, if the yield jumps up to close to 1%, that could be a great opportunity. So just remember, always keep your eyes on the bond market for the rest of 2020. Alright, question number 6. Is your fund allocation to cash higher right now than at the start of 2020? 62% of the fund managers said yes. Well, I was actually a little bit surprised by this number, because I thought it would be like 90% yes or something. But anyways, more than half of the fund managers are holding more cash than 6 months ago, and I do believe this is exactly what you should do with your money as well. Leave more cash on the sideline and wait for better opportunities. Next, question number 7. Which letter or shape best describes your expectations for a US economic recovery for the next 18 months? 36% of the fund managers believe we will have a W-shaped recovery with choppy growth and a contraction. Only 8% believe we will have a V-shaped recovery. Well, I have 2 thoughts on this. First, the current market is definitely pricing in we will have a V-shaped recovery, but only 8% of the fund managers who truly believe a V-shaped recovery is possible. So in some ways, it shows the current market is extremely overbought, and we're due for at least a short-term correction. Second, no matter it's W-shape, Nike swoosh, U, or V-shape, 92% of the fund managers believe the US economy will be able to fully recover eventually after 18 months. Only 8% of them believe we'll have much bigger and longer trouble. And that leads us to question number 8. Do you believe the S&P 500 will retest the March low by year end? 81% of fund managers believe S&P 500 will not go back to the March low within this year. This is another extremely high conviction result. Even though those fund managers have a very mixed opinion on where the market will go for the rest of 2020, but on the downside, they seem to be very sure the worst is already behind us. We will most likely not gonna retest the March low, at least not this year. Alright, the last question. Who do you think will win the 2020 US presidential election? 46% of them believe Joe Biden will win, and 45% of them believe Donald Trump will be re-elected. This result is kind of similar to the question 1 result. The 2 candidates have pretty even odds, at least according to the fund manager. The election in November definitely adds another important layer of uncertainty into the market. Back in April and May, the market was definitely pricing in that Donald Trump will be re-elected in November. But now, the narrative seems to have changed, and the market is quietly pricing in a 50-50 chance on the presidential election. Alright, that will be the end of this video. If you are new to this channel, my name is Vic. I make videos every week to share some of my thoughts on what is going on in the financial market, and also what are the trade ideas or investment opportunities that you should pay attention to in the market. If you are interested in the world of finance and business and finding my videos have been valuable to you, please consider subscribing. Thanks so much for watching, guys, and I will see you guys soon.